Hi there, traders. This is Brad Gilbert with FX Market Insight for Friday, the 7th of May. All right, now a few little flush outs pre-non-farm payrolls, and it was sort of a little bit expected. Like you see the dollar index here, it's trading sideways into this sort of wedge formation, if you want to go back and use some old tech terms. Now, usually when that happens, if there's no fresh data coming out, I know we had the initial jobless claims, you see a drop to the downside, flush up to the top side, cleans out the positions, stale positions, both sides of the market, and then starts trading sideways as we wait the key data. Now, I think today's trading is a bit more like that. If you look at the general news, right, you're trying to piece together what's going on with the dollar, and I'll show you the major charts in a second. So dollar dips on improved risk appetite, right? And it's, you know what, I think it's just a flush out of positions this week. Like the dollar index is down about 40 ticks, which isn't much, but it's enough to get the ball rolling. And when you come back and you have a look at the market, you're trying to piece this together. You say you're looking at, what's going on with the treasuries? Was it the treasuries moving the market? And you look at the yield here. Well, you know what? There's a decent drop in the yield, right? So that warrants a dollar sell-off. To me, that's more of the reason why the dollar moved. They're sort of saying, improved risk appetite. So because equities go up, the risk on profile comes in, the dollar block rallies, the dollar drops. But this is no big move in the equity markets. Like the Nasdaq up 0.8, Dow Jones not much more. It's hard to say that was the key driver. The equity markets, if you have a look at the yields on the treasuries here, they are lower, significantly lower, and that's a dollar sell-off. To me, that's the answer that we're looking for. So because you come back and like some of our traders are seeing, Lee had a good post here talking about dollar CAD. I've been watching dollar CAD all week. It's in a prime position for a big move either way, pretty much on the back of non-farm payrolls, whether we get strong or weak US numbers and the Canadian numbers. Don't forget those two releases, the employment numbers, are all coming out at the same time. It's a bit problematic, but you sit there, you watch these trades, and then you come back and you go, well, what the hell happened? Well, treasury yields have fallen and the dollar has drifted to the downside. Now, just looking at the charts, you can see that's moved down here in dollar CAD. This is supported, in part by a stronger oil, right? Dollar CAD. So we've got dollar weakness. Bank of Canada's already given us positive, like a rallying Canadian dollar. You get the dollar weakness and oil. Downside looks like the way it's going from here. And with this now, almost 100 points from resistance, it's going to get it as loose as a goose on the employment numbers. Remember, Canadian US numbers come out at the same time this month. So if we get weak US numbers and strong Canadian numbers, this thing could be at 120 in a heartbeat. So just be careful of that. On the reverse side, if we get really strong US numbers and weak Canadian numbers, well, we're going to see a rally back towards 122.80. But this is the picture we've got. Okay, so you got this flush out. And if you're looking at the dollar index, it's still within recent ranges. It's not a massive sell-off. No one's going to get aggressive on the dollar ahead of the non-farm payrolls. So we've got this sort of flush out down the downside. Weak short positions have been taken out on euro. Notice it hasn't gone too far, right? This is just a little stop loss flush out. Sterling is just doing its own thing. Aussie and Kiwi, once again, just remind the market that they are still in play. And once again, those short positions that have been put on the last couple of days, flushed out before the non-farm payrolls. And if you're looking for evidence of what the dollar's doing, look at dollar yen, right? The yen is neutral. And this thing is just trading sideways. So don't get sort of too caught up on what's happening. Dollar Swiss is just following its big brother, euro, right? So it's had a little, we had a little flush out at the top side during the week. Here's the flush out to the downside. I'd say we'd be at 91.20 before the non-farm payrolls come out, where it goes back, takes out the stops top side, takes out the stops downside. We're talking short-term positions, so it's not like a major move. And then it gravitates back to the middle of the range as we wait the big data, because that's where the real move's going to come. So this is not uncommon, if I can get the words out. So what you've got to do is try and anticipate now where the next move's coming from. And this, it just involves, you can't go and force the market to give you better trend lines. But now we're looking at, say, new trend lines on the downside, Aussie Kiwi. I just get those in there. Okay, I wouldn't be moving this euro to any levels here at this stage. If anything, I'd be going back and trying to work out where that real high is, right? And coming back over here. So I know that the key levels here to be sort of keeping an eye on. Euro's got a big move to the top side. We get some outrageously weak numbers here. I mean, there's an easy 70 points to the top side. And I tell you what, with euro, okay, the biggest pair in the market, where most volume goes through, this sitting in the middle of a range, okay, it's been here. Look how it's been here a lot over the last week or so. It's right in the middle. So just be careful. I know a lot of traders jump in. There's a lot of propaganda, a lot of sales, a lot of marketing around, watch us trade the non-farm payrolls. With this in the middle of a range and these moves that have just come out of the North American session, liquidity is going to be scarce. What that means is it may be trading at 120.60 at the time, like a minute before the release, right on the time the banks pull their liquidity, right? So the price action may go from 60, 62 to like 90 to 20, right? There's all of a sudden there's a vacuum created. The price widens. So if your stop losses are anywhere in between here, you're taking out both sides of the market. So don't get clever with pending orders here. This is not the time to get cheeky with that. Wait for the numbers to drop and then jump in. Now, for those that are super keen, obviously dollar CAD to me has the clearest direction at this point, which is down. But trading dollar CAD is going to be a tricky one, and you've got to have strap yourself in, because not only do you have the non-farm payrolls, right? You've also got the Canadian data coming out at exactly the same time. So you've got two major releases here with a lot of variables. The market will move pretty quickly. What you could do is assess the situation, what's the best trade for you. I tell you what, I mean, it's very hard to shy away from this because it has moved ahead of the numbers. Strong US numbers, weak Canadian numbers. You can easily see this thing back up here. Now, unfortunately, the price action will probably jump to 122, the figure straight away. So it may look easy on the charts, but the price action, it's not very easy. So if you are looking to get aggressive around like close to the release, reduce your trade size and take out that immediate price action risk on the data, right? This is a big event. The US numbers have really been coming into play. So make sure you're focused. Keep an eye very closely on what the treasury yields are doing, right? If these are up or down, that'll give the dollar bias. The smart play is wait for the US numbers to come out, probably stay away from dollar CAD. It's going to be a higher risk opportunity with all this data coming out on both sides of the equation. See what the numbers come out, see what the impact is on the treasuries. That'll give you dollar direction. You may miss the first 30 or 40 point move, 50 points. Doesn't matter. You're going to get the next week of direction, right? So if treasury yields are in play, you can even confirm what's happening there, because if the yield increases, equities fall. If the yield falls, equities rally, right? That's the focus. And when you know that's happening, whatever happens on the treasury bonds will happen on the dollar pairs, right? So it's an easy one. Unfortunately, to get the answer, we've got to wait. And that's where you miss the initial 30 or 40, 50 points. But you're in the game, you haven't lost any money, and you're ready to trade for the next week. And don't forget, we've got US CPI out next week as well. If the non-farm payrolls matches up with the CPI, we could have a really good month of like a medium, short-term, medium trending US dollar, and that's cash. That's where the money is. All right, guys, good luck. This is it's a big event. Don't get yourself too worked up. Don't over-risk your capital. Stick to the plan. Focus on what's really happening, not price action. Good luck, guys. All the very best.